Okay, one of my mentoring students mentioned a level that we did not mark on the end of the day charts on Friday and wanted to know why it wasn't marked. And so we're going to talk about that. This is the level that was not marked on our end of the day charts. In fact, let's see if I can go pull that up, end of the day charts. Here's mine. Let me pull it up here. So it was right here, this white candle right here, draw the line across. Why did we not mark that one? So let's have a little discussion. So I don't think he was on Zoom. So let's look at this chart for a second. What are we noticing from the bottom? What are we doing? We are laddering up. This is the third ladder up. When we're laddering up, do you want to take the first short that's in front of a second or third ladder up? Probably not the trade you want to take. The other thing, when I see these kind of backsides, so let's go to this moment in time. Let's say price would have done this, and let's say this. So price really went away. It took out all these break levels, took it out, made a new low. I have two candle clearance on this backside, these two. Now, if price came back, heck yeah, I'm interested in that short. I'm willing to take the heat because I know I have this level and I know I have this level. I'm willing to know that that's going to happen, but I've got two backup levels within 6 points. I like it. This is what I'm actually hoping would happen. This is my two chess moves ahead, but that is not what we were presented with. I want to come back in here and draw these. Let's put these back in here. So price is looking something like this. We're definitely laddering up. So this is the second ladder up, and I was in this third because in fact what I did is I dropped down to the 1 minute. I remember this trade, and there was a 1 minute level right here in a fair value gap, and I went long. But let's go back to the 3 minute chart for a second. Let's get rid of the replay. So came down and it failed to take out this break level. In fact, it bounced nicely in front of it. 1 minute level. This is where I actually went long because it makes the most sense with this price action, ladder, ladder, ladder to go long. One thing that didn't happen. So now let's take a step back. So this is actually what I did. I was long. But let's say you were not long and you were some reason wanting to go short. Let's look at this. This backside, this is the real backside. Because here's our peak, and the real backside's the bottom is the base of this candle. We didn't have two candle clearance. It never went away. So I have no interest in taking this middle backside. Zero. If I'm going to take any trade, it's going to be the greediest level, which is the first level. So I didn't get any candle separation. We didn't even get all the way to the break level. Do you want to take the very first short? If you do it small leverage. Now, a 3 minute chart doesn't tell you the whole story. We're going to pop down to a 15-second chart. It gets a little more granular of what actually happened with price, which is one reason I like the higher trading view subscription, is because I can nail down what happened a little bit better. So here's what happened. Let's zoom this in. This is the backside. Not very pretty, but that's not what I'm here to look at. Price came up, and how close did it get to the level? Within one tick, and then dropped 2 points. This was your entry. If you were going to go short, this was your entry. You'd have probably front run it a couple, 3 ticks. You'd have been in the trade. Let's say you made 50% of the range, so you made a point, basically, or a little less. So the 3-minute chart is a little deceiving on this. So one of the things you should do when you're marking levels, you're like, oh, that looks like it ripped right through it. Yeah, it can look like that on a 3-minute. But when you drop down to the granular, you'll see that this was front ran by 1 tick, and you would have been in that trade. But I want to go back to, we are laddering up. Do we want to take the first short that's standing in the way? Second thing I want to remark is I would only want to take the real backside. And if this real backside is not developed, I certainly don't want to take the middle backside, because to me, this is signaling strength. Does that make sense? So let's take this down to here, where it's, do I actually have 2 candle separation there and I missed it? Hold on. So, am I wrong on this? Where is my tool? Boom. You actually have 3 candle separation. But how much separation do you have? Would you say that this went away? Or would you say it camped out? Yeah, it camped out at 1 tick. I would never take this trade, ever. But you do have 2 candle clearance. Let me drop down to 15 seconds on this. I want to see what happened on a more granular level. Yeah, I mean, these candles are in 1 tick separation from that line. You can't take that trade. I'm not even going to mark that. I did have 2 candle separation, but how much separation I have? A tick? Do we even count that as a separation? If I count 3 ticks as tested, that means we need to go at least 3 ticks away. So it's a weird one. I certainly would never take that because we did not have at least 3 tick separation. And I really don't know how much separation I want, but I want several points. I want it to go away and obviously come back to touch it and go. As I said, if this thing would have taken out these break levels, you know, let's give it a candle here, a candle here, and then a push back up. I'm taking it because I have good separation there. How much distance is that just visually? 4 points. That makes sense to me. 1 tick separation does not make sense to me. So definitely I would not take this. And if I'm not going to take that, I'm not taking a middle. And I really wouldn't take this one because we're laddering up. And the astute trader, in my opinion, would be looking for the long, seeing that we were laddering up. And I remember at least me and Mike M were long. Maybe Mike A was long as well. So that's my analysis of that. If I don't have a good backside here, that price went away, how far away? Well, at least 3 ticks, because I consider 3 ticks tested. This never went past 3 ticks, so this was never a level. And I want at least 3 or 4 points. And I want price action to tell me it's worth taking a short. Price didn't even get down to this break level before it came back up. So just watching price action trumps the fact that there's a level there. And remember, the 3-minute candle doesn't tell you everything, because when we dropped to 15 seconds, that came within 1 tick, dropped 2 points. That would have been your trade. This backside certainly is not a trade. I would never mark this level or take this trade. If you were going to take one, it would need to be a little bit greedier up here. And to be honest, I don't like how far that away is from the top. That's 6. So this is a great discussion. It's amazing where some of these discussions go. So if you entered this trade, and let's say you front ran it a tick or so, you can't take this trade. The break level is 7 points away, and you don't have any protection layers until the break level way up here, which would be, I'm going to draw in the break. So you have one protection layer, which is the break level, which, by the way, look at that. That did provide you protection. You could have easily gotten out at break even, but it's just not a great setup. We're laddering up 6 points away to the break level. Let's drop to a 1 minute. So if you were to go to the 1 minute, you don't have, you have a 1 minute and a fair value gap right here. I didn't mean to do that. 1 minute and a fair value gap. Let's delete this. Dropping in time frames a little bit would have been really smart. Let's go back to 3 minutes for a second. Is that in a fair value gap? This mark right here, it is in a fair value gap. It's also in the middle of that fair value gap. It's not at the edge of it. So that 1 minute level right there was really good. If for some reason you wanted to go short, I would break this down a little bit less and go to the 1 minute. Is there a better entry than that 3 minute? And the answer, where did that go? Is that up here? Jeez. Where did it go? There it is. This 1 minute definitely gave you a better entry, because at least it's in a fair value gap. I'm curious. Let's go to 30 seconds. Let's go to 30 seconds. 30 seconds and the 1 minute's the same level. And then you have this beautiful 30-second level, which happens to be the break level. So remember, inside of a 3 minute candle is 3 1 minute candles, 6 30-second candles. There very well could be a better entry. And especially when you get those long candles, I really like to go down in time frames and find a better entry. So let's go back to this 3 minute. I want to see how big that candle was. This is a great discussion. How big is this candle? All right, that one candle, 5 1/4 points. That's a pretty big candle. So yeah, it warrants breaking down. If you just said, I can't wait to take this short after 3 ladder ups. I don't think anyone's going to say I cannot wait to take this short after the 3rd ladder up. So you've got to take price action into consideration of, do I want to trade and at what size? If you made me take the short, it would be one little MES. And I would definitely go in lower time frames and find an entry closer to this break level, because I don't want to take a 6 point stop loss by going short after a 3rd ladder up. So think about it.